Well, good evening. We're on October 10th, Sunday night, just looking at the market before it opens. We're options trading pilot. We help individuals understand and successfully apply investment strategies. We look at stocks, stock options, futures, commodities, Bitcoin, and other cryptocurrencies. So we'll take a quick peek. Again, we're options tradingpilot.com. Let's take a quick peek at the markets. By the way, this is a very interesting week coming up. It's expiration week for October. October is an also very interesting month, volatile month historically. And really over the last 2 decades, October has been a very good trading month. We also have earnings season starting with banks, and I'll show you that at the beginning since that's where I am. So we have quite a few earnings coming, and you can see this list right here. These are all coming this week. All the banks start off, some bigger banks, and we'll look as the week goes on. We'll be trading quite a few of these, depending on, like we've been talking about, the implied volatility rank. If it's over 20, we look at liquidity rating. Usually 3 and 4 stars are a lot easier than 1 star to trade. Looking at bid ask, and then looking at how much volume is in these individual items as well. So if we are to look at some of the futures markets right now, this is one of the products that we like to trade. This is the 2-year interest rates. So when interest rates go up, this product actually goes up. So it's directly related, not inversely related like a normal bond fund. So Guillermo will get into this more later, but I'm pretty bullish right now on interest rates. I think we are seeing a lot of interest rates go up. And I think we're going to continue to see that. Here's the 10-year. And then this is a small cryptocurrency. We're up, like in Bitcoin now, we're over 50,000. I think it's maybe 52,000, 54,000 as of now. Oil and gas are also up just slightly, but I think we're seeing across the board that we're quite a few different positions. We'll take a look. I have this volatility in inflation. This is the VXX. This is similar to the VIX, but the market was pretty flat last week. The VXX actually and the VIX lost about 20% of its value, so they took volatility out of the market, which is great for premium sellers like us. And so we're running right around the VXX is around 24, where the VIX is around 20. Some of these items, if you don't trade corn and copper, silver, gold on the commodity exchange, oil, some of the funds that I've liked, that I've talked about in previous videos, is DBC. This is a basket of different commodities, and that's done very well. Oil is pretty heavy in this one. We have a copper ETF. That bounces around quite a bit because it's really focused on just copper. We have this PDVC, which is an Invesco product. Again, it's an exchange traded fund with no K1, so it's not a partnership. But again, that's done very well, and I think we'll continue to see that do well. GLD is, if you're bullish on inflation, we'll see how the week goes with gold. We have silver that follows a very similar pattern. And then another one we like to trade, but it's a little bit difficult to trade, as interest rates go up. This TLT is a 20-year treasury bond. So as interest rates go up, TLT goes down. And you can see here around about 2 weeks ago, interest rates started to really go up. This fund dropped down. So you don't want to be long this. but we generally short this with a bear call spread, and we can get into that in more detail. So I think overall that's how the market's looking right now as of this morning or this night. So I'll turn it over to Guillermo and he can get into some more details. But as a recap, I think I'm pretty bullish. I think there's looks like there's quite a bit of demand. There's money flow going into the market. People are bearish in the news, which is always bullish for stocks, and I'm pretty bullish on the bank earnings this week.
Yeah, John, thanks for that recap. That's actually pretty excellent. I'm gonna do a little bit of just kind of a general overview of where the weekly movement of money is and what we need to do. So let me reclaim host here so I can, here you go, I'm the host now. I switch over to the screens that I want. This will stop the other screens. Yes, continue. So let me get into my overview here. And here we go. So I want to echo the sentiments of John. I'm actually pretty bullish now, especially in the fourth quarter. I know that October tends to be a difficult month to trade as far as like those buy and holds. If you're an options trader that likes to sell premium like we do, then it's a very, very good month we should see. Earnings season could be difficult, and I just want to touch upon that for a second before I get into it. We like to do earnings trades. A lot of the trading information out there is that you stay out of option trades during earnings. And I understand the reason. The reason is because you get these volatile movements that go against you. And so you could get hurt pretty badly. So if you have enough capital in your account, there are ways to work around that. And just the gist of it is that if the move of the size of the move is higher than the expected move, and we can go into detail what the expected move, but the market generally sets kind of like given the implied volatility of how many points we should expect the stock to move from the date that you purchase or you sell the option till the day of expiration. And so that move in implied volatility translates into actual point moves in your stock. And so if earnings go out and they supersede that number, then there are a lot of strategies you can use. I basically like to either short or go long that stock, at least to hedge some of the losses that can occur. And then of course, you could still win a trade on options even though you're down as far as where the direction of the stock goes. And that's all because of our favorite implied volatility number. When implied volatility crushes down, then we have an opportunity to exit the trade without a loss, even though you should be losing. Anyway, I'm going to get into this weekly review. So as you can see, I like doing the favorable industry weekly. Last week, we talked about the semiconductor coming into a leading number, but as you can see on the weekly, we see it going back to the improving section. I'm still favorable in this sector, and the main reason is because there's a big shortage in this area, and so we should be able to see prices increase. We have some earnings coming up, obviously, for the semiconductor industry. TSM Taiwan Semiconductor is one that we're looking at. We can talk about that more in-depthly in other shows, but basically we are long on it. I'm bullish on it, so I do expect numbers to go up on that. Obviously, the great thing about trading options is you can offer yourself a buffer in case you're wrong, and that is my favorite thing because I like being wrong and still making money. So again, this is a different way to look at the RRG charts on stock charts, and this shows us that on a daily basis, you can see that semiconductor is actually in the leading, and the weekly shows differently, but you can see we can still have shorter term investments here, and from here until the end of where earnings come out, then we should be very favorable to that. This is a different way to look at the semiconductor index. You can see that this is the daily view, how volatile it is. It just likes to move up and down, move up and down, move up and down. We like this as premium sellers. And we like this mainly because we can extract a lot of premium from our option sales. You can see that it does venture back and forth from high number to low number, but the lowers tend to be higher lows, except for what is going on now. So we're going to keep a close watch here, but we do anticipate this to go back up. Yet another view of where the semiconductor industry is going. You can see there's a slight slowdown. It's a loss of minus 0.86% on Friday, but we are seeing an improvement in the full stochastic. Okay, this is a different view that I wanted to kind of educate the new listeners that haven't seen this chart. This is a correlation chart, and what it's doing is as looking at different industries and is comparing those industries to what the S&P 500 is doing. So basically, if you look at the top, we're seeing that we're correlating each one of these sectors with the SPX over the last 20 days. And so this is a more recent measure. And as you can see that the technology sector is basically mirroring the S&P 500. So for every dollar or every point that the S&P 500 goes up, technology sector does the same thing. As you can see, the energy sector is negatively correlated, which is saying that if the market is going up, then energy is going down, and vice versa. If the market is going down, energy sector has been going up. And so that's actually true because we have seen the market go down. It's been a very whipsaw session here in the last, I want to say 30 days. And the energy market has done really well for us. So just keep in mind this number. This number over here that you see is that 0.61, but in general, take a look at where correlations are. The financial sectors is basically not correlated to the markets. The rest go from high to extremely high correlations. So let's look at over the last 6 months. Again, the energy sector is still negative, is negatively correlated. But look how interesting this is that the material sector over the last 6 months has had a negative correlation. And as we can see, over the last 6 months, the market has been going up. So it's been going down. So let's pick up the material sector. Notice that in the last 20 days, the material sector has picked up steam. This is a way to find value if you're a longer term investor. As far as options is concerned, I like to look at this just to get a general feel of what industries we might be looking for good trades and shorter term trades or even day trades. So it just provides a good foundation for us to make these decisions. So let's look at what happened over the last year. So over the last year, everything's up. If you're a long-term investor, just close your eyes and pick an ETF and you'd be great. And if you're an options trader, then hopefully you're selling a lot of bull puts, right? Because as you can see, everything was up and the market was up. Lastly, I want to start closing with the SPY chart just to kind of give a general idea and direction of where we're going. As you can see here, it's like we've had a heck of a time starting in around early September, mid-September, that it's just been going down and tries to come up. Usually what we have seen is that once it closes down, it really whips us back up, right? We started to see this here, but again, we got another negative, and this has to do with many reasons, one of which is the debt ceiling. But Friday was an interesting session because we did see it go up and then slide down. So it will be interesting to see what happens tomorrow morning. The futures market, I know we're both bullish on it, but tomorrow could be a negative day. The futures market is negative as of right now. It started going up and it's now negative. So just keep an eye on that. And then lastly, I really like to take a further view out. This is the weekly chart of the S&P 500. Notice that if you just close your eyes and forget about looking at the daily charts, which really could, the volatility could disappoint you or drive you a little crazy. You can see here, right, that the weekly chart is a very steady Eddy climber, right? So we are still not in an area where we should really be that worried. It hasn't broken down or been negative. It's obviously way more of an issue as when you see it on a daily chart. But when we get a little perspective, we feel really good about things. The fourth quarter tends to be a really good month for stocks. And obviously that's because there's a lot of expenditures. There's a lot of just holidays and season of enjoyment. People tend to be in a good mood. So we should see the market lift. That's the end of my general analysis for the week. So again, we should be paying attention to semiconductors, and we should be putting trades in that give us a little buffer. And we don't have to guess if the market's going up and down. We can put trades thinking that it's going one way, but allow yourself a buffer in case you're wrong, so you can still make money. John, you want to add anything to close?
Yeah, just a couple things. How do I have my screen recording back, or do I say unshare screen?
Yeah, you can unshare screen, and I think you still have host. No, I'm going to make you host. Make host. There you go. There you go.
Okay. Yep. So like Guillermo says, when we trade, we trade with mechanics, and you'll see from other videos, we won't go through all those tonight, but we trade very mechanically. We trade with probabilities. We don't have to be, we can still earn money and be wrong in the direction of the market, which I love because I'm usually wrong, but I can still make money in a trade based on volatility changes and things like that. So, so I think for this week, a couple areas to look at. We have a lot of banks coming up. This one is XLF. That is when I say banks, it's loosely defined, really financial industry. That's an ETF. That has an IV rank of 23. We would generally, this won't move as much as one individual bank, but this does have a basket of banks in it. So if you want to be maybe a little more diversified, that's one area that you could trade. And we'll be looking at that for some base hits. $1 wide strikes, fairly good bid ask. This is volume from Friday, but good volume even before the earnings week. Another is KRE. You can see this one. Now this is a little bit different size banks. The IVR is 14. So instead of selling credit, this would be more of buying premium as a debit spread. But again, fairly tight, fairly good market. So that's another area that we'll be looking at, depending on how bullish we are. Typically, we like to sell premium, but we're not 100% adverse to buying premium if we have to. And again, we're options trading pilot, here to help you navigate through the trading day.
Exactly. And really, it's like the whole thing is creating an income while you're creating return. And so that's our main focus. Most of our trades are premium selling, but like John said, we don't mind buying premium, especially when the implied volatility is down and we expect a regression back to the mean on a higher implied volatility, and we can then sell the option at a higher implied volatility. We'll come visit our site on Discord. We're on Discord on our website, and we welcome to see you.